Hi, this is Randy Finney with Right Side of the Chart, and this is a late morning session update for Thursday, October 17th, 2019. I'm going to start out here with a very quick, brief overview on the broad markets, where we're at there, and then roll into, again, focus on some alternative trading ops in addition to the broad market. We'll focus on the cannabis sector again today. Very close, not there yet, need a little bit of nudge. I'm going to go over everything in a second here to spark a potential short covering rally, and I wanted to share some additional trade setups there. We're just going to start out here, very quick overview. We'll look at the futures. We're QQQ, 60-minute chart. We're still in the upper half of that price channel, which is about in line with this trend line I gave you this morning on NQ. NQ just kissed that trend line. So we had a divergent high here. As I pointed out, that was the same level right here back in early mid-September right there where the market peaked, had that head and shoulders topping pattern on the futures right here. NQ came all the way down to this point, so that certainly played out for what was indicated. And as I pointed out this morning, we had about comparable divergences right here on the 60-minute chart. Remember, we had little divergent highs before. Little divergent highs give you the little corrections, little divergent high, little correction. There's a potential for a bigger one here, but cross currents. My convictions aren't super high because the near-term trend is up, and again, as I said, big fangs are coming up to report in the next week or so. Hard to see the market really rolling over, although here's things that we're watching. We're going to look, well, let me just wrap that up by saying we tagged that trend line. So if you had an NQ short, certainly in a with a divergent high today or whatever reason, certainly a level to cover. Or if you're looking to short, as I said, break at that level, and you want to watch that midpoint line on QQQ, that should trigger a pullback to at least this level here. And like I said, divergent highs just makes the risk reward, although the near-term trend is up, the risk reward for longs is very poor at this point with the market at resistance. And again, better fish to fry elsewhere. So let me roll over into something else. Let's look at the economic calendar. Earlier this week I mentioned we'd have a slew of economic reports coming out this morning, and then concluding with the industrial production report at 9:15. This one came out. Most of the reports come out at 8:30, about an hour before the market opens. Gives the market time to digest everything, and for whatever reason they kick out industrial production after the market opens. All right, so I talk about this often. I suggest to keep an eye on the economic calendar. When you're in the site, click on resources. That brings in the right side of the chart support center right here. Down at the bottom, tools of the trade. I have almost every day, especially now with earnings season going on and a lot of economic events that have the potential to move the market and influence what the Fed does with rates. Very important. They're right here. So there's your link to the earnings calendar, economic calendar. If you click that, it's going to open up Econo Days economic calendar. And then what you want to do, here's today, you can click on each report and it'll give you the details for that report. All right, so this is fundamental stuff, but it certainly plays into the market. So here's what we had with industrial production today, and you can see the market took another leg down after they came out at 9:15 today. So you had the numbers came in, the consensus. Here's your consensus range. This is pretty wide range where economists think it would come in. The overall consensus was a contraction of 0.2%, and we doubled that. So read these highlights. I won't go into it now. You can read all that, and it kind of, my takeaway from this is this. Bulls will hear and believe what they want to see. It's confirmation bias. Those that think the market and the economy is strong and has a lot more room to run throughout 2019 and well into 2020. There's that camp, and so they're going to dismiss this as the GM strike and some other things. So you read through the report. Call it confirmation bias. It's because it's my view fundamentally, which aligns with my view technically, and that's the bigger driver of the two. I'm in that other camp that says the economy is like a big super tanker. Doesn't turn on a dime, but that ship has been turning, meaning the economy has been rolling over. These economic indicators, it's not a steady down. There's a lot of different indicators. You're going to have some that come in positive, some that come in negative, but overall the trend's been lower. So again, you guys can determine or try to decipher what you think, and here's a link down at the bottom, why investors care. So I'd suggest you become familiar with these type of things. If you're going to trade or invest, technicals are a big part of my trading, but fundamentals are also, especially to formulate your longer term outlook for a stock or the economy. Take advantage of that economic calendar. All right, let's roll into some trade ideas here. On a somewhat related note, I mentioned that we had the nat gas inventories coming out today after the market opens. Well, they come out weekly, 10:30, so that's during the session. So that's out of the way now, and whatever, I don't even care whether inventories came in above or below expectations. All that matters to me is the reaction. So nat gas futures are up almost 2% today, and the trend is still up. Yes, I had an uptrend line, a price channel here. Yes, it was broken. Yes, it is being backtested. So from a technical perspective, nat gas is in a precarious posture right now. Breakdown, backtest right now, needs to regain that channel. Otherwise, you backtest a channel or trend line from below. If you start to see us move away, a rejection, that's not going to be good, especially if it's impulsive. And then from that point, you want to watch the previous reaction lows and all these other support levels on my chart. So to keep it very simple, remember the near-term trend. Even though here's a trend line, yes, broken, back-tested. However, right now, nat gas continues to make a series of higher lows and higher highs so far. That's an uptrend. Might not fit well with a trend line. And so from right now, we either need to take out yesterday's highs, which was right at that 240-ish, 239 resistance level. Or if we break the previous reaction high, and more so, I think this 226.4 level right there, that's not going to be good. So I'm still near-term bullish because of these big divergent. This was a big divergent low right here, and I think there's a lot of bearish sentiment in natural gas, talking about a glut of nat gas and everything else going on. And I think maybe that was an overcrowded trade to the downside. Either way, just wanted to update that because again, that's in my recent theme of alternative investments have little to do with the stock market, because I don't have a strong opinion on the near-term direction of the stock market, other than it's probably going to grind around for the next week or two until the big fangs report. Okay, and that leads me into a sector I'm watching. And again, I just want to reiterate, I made some additional comments in the trading room. There is a big difference between a bullish setup, especially when you are looking at a counter trend trade. Make no mistake about it, the cannabis stocks are in a bear market, a bear trend, whatever you want to call it, a downtrend. So any rally right now is just a counter trend rally. And what you need to see is not one stock, not even this ETF alone breakout. You want to collectively look mainly the ones that I covered in yesterday's video, cannabis stocks. Those are your bigger stocks, Canopy Growth, Aurora Cannabis, Tilray. Look at those, and you want to see, they all don't have to be breaking out at once, but you want to see the majority of those stocks start to break out, and you want to see impulsive, and you want to see it on volume. So here's what happened today. MJ, I had recently told you it needed to clear at 1986. It popped it today, but briefly at the open. You get these order imbalances at the open. One of the cannabis stocks, CRON, C-R-O-N, I highlighted yesterday, jumped about 50% overnight into this morning's highs from where I highlighted yesterday. That kind of gave a little pop to the stocks. Yeah, that one, they faded a lot of those gains so far. I'll get to that one in a second. But again, give it the benefit of the doubt. We're in a downtrend, and so that's 60-minute intra candle break, but we closed back down. And what I did at that point, and I put this out as an official trade today. See, there's the opening pop. And these are order imbalances. You don't jump the gun, especially on thinly traded securities. These cannabis stocks are not Apple and IBM and GE. They don't have the liquidity those stocks do. So when you get opening balances, order imbalances, see what happens after the first couple minutes, and you can see they faded that. And that's why I said I think I put the entry at 20, because I believe at this point, right or wrong, what I think will happen if we power back up and then break out the 20. I don't need to see today's highs get broken out. I think if we get above 20, I see a lot of resistance intraday here, about 1990. So clear that, and I think the buyers will start to come in. So we're very close. We need that little nudge. And if not, then it's just a potential breakout that failed to materialize. Nothing more, nothing less, and the downtrend resumes. Don't get excited because some of these stocks are up 5, 6, 7%. Like ACB today and some others, and of course that CRON, which had that 50% pop since yesterday. into this morning's pre-market highs. That's the nature of the beast on these guys. They will up and down. The daily price swings on a lot of the individual stocks are into the high single digits, sometimes even double digits. So you got to know the nature of the beast. It's not Apple or pick your blue chip company. These are completely different. All right. With that being said, let's see pop above 20. Let's see impulsive volume come in, and let's see some of these others break out. I'm going to rifle through these names quickly because I've already spent a lot of time talking about the details, levels. I'm just going to show you some other names that stand out and do an update on the big names that I shared yesterday. That's what it looks like here on the daily chart. So I'm liking what I'm seeing so far on MJ on a daily chart. I just want to see a little more work on that 60-minute chart. What do I like? I like the bullish PPO crossover, especially with clean separation when you've been below that line. Last time you had one was right here, and you got that came early in this uptrend with plenty of upside to swing trade, and there was your bearish cross right there. So I like the breakout. Yes, not impulsive yet. I want to see, you'll know impulsive when you see it in this sector. But so let's see a little more work. All right, let's moving on. Here's the holdings in MJ that I covered yesterday. There's Cron, C-R-O-N. Cron hit a high of $11.99 in pre-market. That is, remember, it was here yesterday. There's yesterday's candle. So that's almost $12 right up in here in pre-market. And then it reversed from there earlier this morning. And that's just 40-something, close to 50% pop from where it was yesterday. I added a secondary resistance line here today that I didn't have in yesterday's video, 1064. So we need to pop that, and I shared it as a setup in the trading room. I said if we can pop that, and I see the momentum I'm looking for, the breakouts in these other stocks and MJ, then I think Cron heads up here to 1319 or give or take in that area. So that's one, and we're going to watch that. Right now it's all the way back here to 879. The candle's green because it's still positive on the day. It's still up, almost 5%, and it's pulled back to backtest. I'll say this right now, although it's still speculative because we need to see more confirmation from the rest of the stocks in the sector. Here's a back test, a breakout and a back test. You could go long Cron with a stop not too far below, and even if it just makes another run up there at that 1064 level, you're looking at about a 20% gain. So set a stop maybe below today's lows, somewhere in there, if you like it. And if you're not an aggressive trader, you probably ought to stop this video now and wait for some more steady type trade setups. ACB, Aurora Cannabis, I added this one. I believe I added it as an official trade idea. Needs to pop 384. It hasn't done so yet. You can see that's why at these levels it's trying to break out above this downtrend line. What I'm going to do right now, well, I'll just show you. We had a little spike there that stopped at resistance. We can move this trend line up like this right now at this point. That's probably the one to watch because that breakout was not impulsive. There was no follow through. It was not an impulsive candle. So here's the trend line, and it comes in right around with that 384, 385 level. So whatever I said, maybe I gave it a few pennies. I can't recall now on the setup. Maybe 386 to trigger an entry, and then boom, 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 boom. Potential targets. Let's just see, of course, if the sector starts to get some traction. Okay, I've been painting the potential bullish scenario, the potential for a bear market rally. It just show you how these things can go, and this is why if you've started to nibble on some of these like I have, meaning taking starter positions ready to add if I see bring up increase those if the sector plays out. Let me give you one scenario here. If they don't, fewer things are more bearish than bullish setups that either have fake breakouts, false breakouts, and then reverse, or just never fail to materialize, especially when you're in a bear market downtrend. And so what I'm showing you here is a potential flag. Let's just show it. Let's just draw from here. That is looks to me like a bear flag continuation pattern. You had an impulsive leg down, flagging action, and this one could certainly play out that way on a downside break. Otherwise, if the sector rallies, they'll probably come in and buy this and foil the flag, and you probably get a rally in TGODF, the Green Organic Dutchman. So that's just something to look at. So don't get married to these if they don't pan out. Also, as I do the video, look at the share price and check market cap. You get these stocks, especially if they're down under a few dollars, especially $1 or less, higher risk on those. All right, let's rifle through the rest fast. CB, WTF. Again, close up today, but needs to just do a little more work to break out above that downtrend line and run. EMHTF I already covered yesterday. If I don't stop on one, it's just not standing out. CGC, Canopy Growth, again, needs to pop above this trend line there on the daily chart. Here it is on the 60-minute. You can replicate that, and that's one of my favorites. I'll buy this one if most likely if the sector starts to take off. And you can see just nice gain potential, but again, don't get tied up in that. If they breakouts either fail to materialize or we break out and then all of a sudden they reverse and dump, got to be quick with these, got to be nimble. Big profits to be made, also big losses if you stay too late to the party when you're wrong. 17% minimum upside right there to that 24-21 target, and you can see some potential trend lines there as well. Canopy Growth, I just covered. Some of these, and you see the TO, if you're Canadian, that means it's trading on the Toronto Stock Exchange, and a lot of these are Canadian companies, so you might want to also go off the charts on the Canadian shares. If they're Canadian listed companies, the US ones are really secondary. They're just listed on US exchanges or in the over-the-counter market, so keep an eye on the Toronto Exchange shares if it's a Canadian company, like a lot of these are. MJ already covered that. OGI, there's Organogram Holdings coming off support real nice so far. Still some work to be done. Let's see right there, breakout. CTST was covered in the video the other day here, broke out. That was already been good for a what did I cover yesterday, about a 50% gain since the breakout there. And this is how trade technical analysis works. This is why I have the line breaks when I draw the scenarios with the arrows. I don't always, if I have a line break, it means you come up, hit the first target, have a reaction, come up, then hit the second target. So this one, you either buy it on a pullback or you wait to see strength in the sector for other breakouts, and or a break above 161, and next target's up there all the way around 246. So even from where we're at today, to try to put in perspective, about a 91% rally from where we're at now, if it gets there. That's just toggling between. Somebody asked about log and arithmetic scaling in the trading room. I'll try to get to that question. A lot of questions take some time to give a detailed, proper response, and I can't always, spend 5 minutes, 10 minutes composing an answer during the trading day. So I'll try to cover that. There's a couple stocks in this video that will illustrate why I like to use log scaling, particularly on stocks, and this is the key, that have large price swings, price differentials, I should say, on the scale. You can see here, this stock, the low was about 77, and the high on this chart, you can see right there, was about 12.18. That's a huge differential, and you get a completely different technical picture, and it's going to show more so on some other stocks that I'll get to in a minute. Tilray, as you guys know, one of my favorite. I added this as a setup today. Just look at that beautiful trend line, beautiful bullish falling wedge. Just needs that that pop there, and a little resistance above. But Tilray could break out, and if the rest don't break out, then what you're probably going to have is a failed breakout. That's why, again, I continue to harp on birds of a feather flock together. These guys tend to run up and down together, and when the momentum players come in, we can start to get the breakouts. It'll build on itself, because then you start to squeeze the shorts that are in these stocks. They feel the pain, they cover, which brings in more buyers. As they cover, they're buying the stock, buy to cover. That's what happens when you close out a short position. You are actually buying the stock, so that's going to drive it up more. CRBP, I'm not sure if I covered this one yesterday. Another one just needs that little nudge to get going. All right, I'm going to roll into a secondary watch list. That's my watch list that I have holdings of the MJ, the ETF, some of the bigger names. I'm going to try to cover as many of these. I'm just going to fly through these charts. Why? Because I've flagged. I have 58 stocks in that watch list, but I've flagged about 30 something that kind of stand out. This one, what I like about XXII, 22nd Century Group, look at that line right there. Beautiful support line right around $2. So you can buy it at support here. If the sector goes, it'll probably go. It's a biotech, but it's within, I have it, and it's related, something to do. I can't recall offhand, but it's probably some type of cannabis related drugs in their pipeline, or currently out on market. I don't know. Either way, at support, just one to watch. Next one up, I think I already covered Organogram. Those are the Toronto shares. MJ, I know I covered IPR. This is a REIT, but this REIT leases land to a lot of these cannabis companies, and so it could go divergent low right there. So look for, again, maybe a break out of this uptrend line, or look for momentum in the sector. With that bullish divergence, it could be the catalyst for a breakout and a rally from there. I don't have all these charts updated with additional targets. If any, if I follow up, if I see any of these that really start to look good, I'll follow up with potential targets. I just gave you 2 right there. Cara, this was one of my favorites years ago. I was highlighting and buying this stock and posted as a trade idea back in the single digits a couple years ago, 2-3 years ago. Stock went as high as 27 recently, and I made the case for a long-term hold in this as well as a swing trade. Back here is where we're buying it. Why am I highlighting it now? Well, it's got some decent support around here, right around where it bounced right now. So it's had a little correction. It could run with the group. Not one of my favorites at this point for a tactical trade, but it was worth mentioning. HEXO.TO. Hexo, that's again Toronto Stock Exchange, coming off support right there. So another one you'd buy at or on support. Chron I already covered. That's just the Canadian shares. Tilray I covered. ACB I've covered. Canopy Growth I believe I've covered. Yeah, that's CGC. The Toronto shares is WEED.TO. GWPH I think I covered that. And that one could see there's a potential flag right there. There's a potential bull flag. Pulse will move down. Your flagpole. I should say bear flag. Talking fast because I'm trying to get all this out there. Potential bear flags. You got to watch this. Like I said, these things can go the other way, and this bounce that I see possibly materializing may not materialize, and that's where the bear flag would project to. ACCA looks like it's already. I wouldn't chase it now. It's already run into resistance. If it pops there's another target. Low price. Pay attention to the price. If these are penny stocks. This is where if it is in your cup of tea, you're an aggressive speculative trader, this is where you take your Vegas money. As much as you're willing to blow on the craps table, that's what you put in these penny stocks. Anything that you're willing to lose, because these things could file for Chapter 11 bankruptcy any day. Be careful with penny stocks. There's a whole mix of these in here. This one again. Okay, here's an example of why I use log scaling. Here's a stock that was as high as about 20 or so bucks a share, and now it's down around 12 cents. You can see back here, you can see recently the trading action. You have divergent low right there. You can see clear trend lines that you could have traded off of, right? Uptrend line broke, you could have shorted it. There's a downtrend line, you could have went long on the breakout. It was impulsive too. So all kinds of good stuff in there, right? I'm trying to just see if there's a trend line there, not really one that fits. Okay, nope, cancel, we'll get rid of that one. Okay, so alright, so you can see what I'm talking about there. Now let's look at what happens when I put a stock with such a huge price range on a arithmetic scaling. Take off the log scaling. Nothing. It looks like it's flattened. It looks like it's been a takeover target where a stock goes and then trades at the takeover price until the takeover is complete. But there's a whole story to be told in the charts there. You just can't see it if you're not using log scaling. So again, and now you can see back here, because that's where a lot of big price moves were back a couple years ago. But up here, you're on log scaling, so it still works. I'm on log scaling. What I have to do now, if I wanted to kind of look what happened back there, just zoom in and you'll see the picture. Log scaling shows it clear. So again, I'm a big proponent on that on my daily, weekly, and monthly charts. Even sometimes, depending on the security, 60-minute or other intraday charts. CGRW, bullish falling wedge. You can see targets there. CVSI, not a great chart, not one of my favorites, but it will most likely go with the sector. It's a $2 stock. CNAB, nice one at support. Really, I think I might have covered this one if I didn't before. Look at it. It's a penny stock. About 32 cents. It is very, very good support on that. So bearish, quite bearish if it's broken with conviction, but look at all these reactions there. You buy it when it comes down to that level, and each and every time try to quantify it again. Look at arithmetic scaling. It doesn't look like a whole lot there, but when you look at log scaling, let me move that line away for a second. Let me just show you what you would have made buying pullbacks to that level. 100% on your money, 42% on your money. From here, another 37. Not that you're going to nail the tops each time, but again, I'm just trying to show you how much upside potential. 150%, and boom. So wash, rinse, repeat. And if it breaks much below that level, that's bearish. You also have a downtrend line in which to trigger an objective long entry. And where would my target be? I'll tell you right now. Minimum, again, if the sector gets some traction right here, about 43.5 cents or so, and that alone probably 25-30%. Maybe even the top of this range. We'll see. I don't know about that right now. But and you can also just, if you get a good price that starts to run, just set your stops at entry or ratchet them up and let it run. It's hard to, know how far a bear market rally can go. I don't see a bottom in the sector right now, but I see a potential for a tradable rally. OGI, Organogram, I think I already covered that. CNBX, low price, 20 cents, highly speculative. Don't, if that's not your thing, don't even look at it. But there's a trend line to watch, breakout, and not a whole lot of resistance, and possibly all the way up here to about 50 cents. That'd be a double on your money. AMMJ, divergent low, trend line break there, low price penny stock. CBWTF, if I didn't cover this one already. See, and the reason I say that, there's so many with these similar, these stocks that have been finding support here. And so if the sector can rally, it only makes sense that they rally once again off this support level. Otherwise, if the sector continues lower, they'll probably eventually break that support. So there's a lot of potential. 53 cents up to about 82 if it hits the top of that range or any of these targets. And of course a downtrend line as well to trigger a long entry. NXTTF, yeah, potential there. HMMJ.TO, not a great chart, but probably run with the sector. APHA, Afria, divergent low, breakout, back test. So see a lot of these that have broken out, they want to run, but they're not going to go too far without the sector. Again, birds of a feather flock together. If the others are not breaking out, the breakouts on the ones that do will only go so far without confirmation from their brethren, if you will, the other stocks in the sector. THGR, Here's one that's a little bit different story. I've showed you a lot of potential breakout candidates. Here's a stock. It's been a downtrend all year since 2019. Bottom right here, late in December 2018, and it's making a series of higher lows at least and higher highs. And the MO has been to buy this one on pullbacks to that trend line, and it's there now or a little above it with a stop somewhat below. So there's another one. If it, it's pretty good resistance up here about the 513-ish level. That would be your natural swing target. If it breaks that, it could run from there. MJNA, very low price, speculative. You can see the pattern to trigger a breakout. Same thing with this one. EAPH, ACAN, same story. Geez, a lot of these are junk stocks, guys. Be very, very careful. These low price penny stocks, they're going to go away most likely. A lot of these will eventually just close the doors. CTST, I think I already covered. All right, so have I cycled through everything? No. MCIG, there's a divergent low, 3 cents, 3.5 cents. But when you get a move in a penny stock, it could be, you're looking at gains that are measured in the high double to triple digit gains. That'd be 100% rally up there to that 7-cent target. EDXC, so and again, this all comes back to my strategy. Not that I had this one, I wish I did. And I saw it a couple days ago. I might have taken some, especially on the breakout. My strategy of taking a shotgun approach, sprinkling small amounts of cash, whatever your number is, and you say, okay, I've got 10,000 I'll play with, or 50,000 or $1,000. It doesn't matter, whatever your number is, to put in the pot stocks. You can either keep it simple with MJ, one size fits all. It's an ETF, it's diversified. If again you get a buy signal there, or the buy signals I've been talking about, or you spread it around, sprinkle around. And this is a low price speculative penny stock, so had you taken it on the breakout, you can see a nice clean downtrend line right here. Actually it fits better like this. Beautiful, beautiful, well-defined downtrend line. Broke out the other day right here on Tuesday, and the breakout was impulsive. What does that mean? Well, obviously a big move plus high volume. You can see the volume bar down here. I have these bars turned down. That was probably 3-4 times the average volume. You can see right there everything you want to see in a breakout. From the breakout point, that stock rallied right up to that downtrend line, that next one, which and intersecting price resistance. That was a 90% gain. So it comes back to the whole keeping small amounts. You don't have to have a lot of money. If you only put $1,000 into this thing, you made $900. Now your risk then on $1,000, if you had a big stop, let's say a 20% stop, you would have risked $200. Let's say if you were willing to let it go down 20%, when you took it. So by taking small amounts, you can use wider stops to stay in these trades and not get shaken out. Because I promise you this, if you usually trade QQQ or SPY, and you're conservative, you like tight stops, 3%, 2, 3, 4, maybe 5%. Again, stop the video, go trade something else, because you cannot trade these stocks with a 2, 3, 4, 5% stocks, because the daily fluctuations in these things, it's usually double digits. So you probably get, now if you're lucky, you get it at the right time and they break out and they explode. It's mostly unidirectional rally. So there is that. But on the the counter trend pullbacks and all that, you'll probably get shaken out. So again, the technicals work well, and that's the other takeaway from this video is, forget fundamentals. Most of these companies are crap. I'm going to say that now. I said it years ago. I've said 2 or 3 years ago when the sector was peaking, actually before it was getting going, and I was doing extensive coverage and posting trade ideas on these things all the time, almost all of them long back then, especially in 2016, 2017. I said you're going to see the market separate the winners from the losers over the next couple of years, and so many of these stocks on this watch list I have of 58 holdings that I'm going through, I'm not covering them all, they're almost, some have gone. They're not trading anymore. They've stopped trading, or they're down to a tenth, under 1 penny a share. And a lot of these I still say will go away. But then the winners like ACB, Aurora Cannabis, Stillray, they're here to stay. Where they go from here, but they're not going anywhere anytime soon. And so that's the other takeaway from this. And now these are, and on that too, is when the sector breaks out, fundamentals don't matter. If it starts to break out, it's just going to be technically driven. Traders are going to look at the technical levels to decide when to buy and sell these stocks. So if this one could take that trend line, next target there, you can see it about 28 cents. And I looked to always sell just a hair below my price target. So let's finish this up. We're at just over the 30-minute mark. Let's look at a few more, and then we'll be done. THCBF, THC Biomed, nice. Look at that long-term downtrend line. Beautiful trend line. Little price channel there. Pop that trend line. I don't see it blinking until it hits 19 cents. That would be if on the trend line, depending on where the trend line breaks. That's the thing. It hasn't even broken out yet, but it should be at least good for about a 40% gain, and could go up to here to 30. That'd be about 120% gain. No breakout, no buy signal. CCAN, Canadian Cannabis, low price. That's crappy stock. Stay away from that one. Oh, I'm done. That's it. Those are the ones I want to cover. This one's not in there. I'm not focused on this one. All right, guys. So I'm going to wrap it up here. And before I do, I'm been tied up in this video. Let's see what MJ is doing. Is it perking up yet? Nope. Still needs to take that $20 level. Take it out impulsively. I think that'll do the trick. But again, you'll need to see some of the individual stocks break out to confirm it, and then that has the potential to spark a short covering rally. There's a little minor downtrend line that may come into play. We'll see. Not a lot of reactions on it yet. We'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.